You are welcome to another edition of the Market Opening Gong, where we give you updates from the Nigerian capital market. This edition captures the market performance for Thursday, December 5th, 2019. From the Nigerian Stock Exchange, the all-share index closed at 26,913.70 basis points with a market capitalization of 12.989 trillion naira, meaning it's depreciated by minus 0.09%. The equities market continued on the red zone as its performance dipped as a result of persistent sell pressures. Chams, Union DAC and Dangote Sugar were top gainers, while Cornest, Medview Air and Abico were among the top losers. UACN, Access Bank and Guarantee Trust Bank were the top players in terms of trade volumes. For the FMDQ OTC exchange, the debt market size closed at 31.38 trillion naira, the NAFEX rate closed at 362 naira 51 kobo to a dollar, while the I and EFX rate opened at 362 naira 56 kobo and closed at 363 naira 7 kobo to a dollar. Looking at the NASD OTC market, the NSI closed at 692.24 basis points with a market capitalization of 497.33 billion naira. Volume of shares traded was 80,507 and the value traded 15.669 million in 12 deals executed. You can also check the Nigerian economic indices on the dashboard displaying on the screen. For the highlights from yesterday, Moody's Investor Service changed the outlook on the government of Nigeria's ratings to negative from stable. Concurrently, Moody's affirmed the B2 long-term local and foreign currency issuer ratings, the B2 foreign currency senior unsecured ratings, and the PB2 foreign currency senior unsecured MTN program rating. The negative outlook reflects Moody's view of increasing risks to the government's fiscal strength and external position. Already weak government finances will likely weaken further, given an extremely narrow revenue base and persistently sluggish growth that hinders fiscal consolidation. As pressures mount, there is a risk that the government resorts to increasingly opaque and costly options to finance a moderate but rising debt burden. Moreover, vulnerability to an adverse change in capital flows is building in light of Nigeria's increasing reliance on foreign investors to fund the country's foreign exchange reserves. As we approach the end of year 2019, WebTV engaged Mr. Ade Adefeko, the chairman Agribusiness Group of the Nigerian Association of Chambers of Commerce, Industry, Mining and Agriculture, on his perspective around the current impact of the fiscal and monetary policies on the agribusiness space. Watch the video.
There are a lot of things that have happened in the last 12 to 18 months, and which have been very positive. But what is important is for us to, on a recurring basis, have a semblance of stability in what we do. And for me, who happens to be a major player in the agribusiness space, I am very, 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 very happy with the happenings in the agribusiness sector, particularly talking about production. We must always fund production, not consumption. I mean, you know the borders were recently closed in the last 2 to 3 months. We've witnessed a 15% increase in revenue on the part of customs, and I think it's a positive development. The government has taken the bull by the horn by closing the borders, and I think what doesn't get measured doesn't get done. So I think there was no political will before now, but that political will has been exhibited. And there might be temporary setbacks, but in the long run, it's a better. 2.5 million tons of rice gets smuggled every year, and that has stopped now to a large extent. And again, as we speak, poultry feed, chicken, and all the likes have all been smuggled. So smuggling is a major problem in Nigeria, but that has to a large extent been curbed. But the question people ask is, scapegoats should be made of those who are caught, and that hasn't happened yet. Don't ask me who the scapegoats should be, but whoever is caught smuggling should, excuse my French for lack of a better word, should be scapegoated. But again, I mean, we've grown in leaps and bounds, but we're better off growing in geometric progression rather than arithmetic. So far so good, but we can do better.
For the key market and economic events to watch for today, market players will expect that the equities market will close on the green zone. And that will be all for this edition of the Market Opening Gong. You can visit our website www.proshareengine.com to get more updates from our news stories and videos. You can also follow our social media platforms showing on the screen for further updates on our market reports. Till we come your way again, thank you for watching and do have a great day.